What are infrastructure debt mutual funds in India? Infrastructure debt mutual funds, IDMFs, are a type of debt mutual fund scheme in India that invest in debt securities issued by infrastructure companies such as power, roads, railways, and airports. These debt securities are typically long-term in nature and have a higher credit rating compared to other debt securities, as they are issued by established infrastructure companies with a strong track record. Infrastructure debt funds are investment vehicles which can be sponsored by commercial banks and NBFCs in India, in which domestic/offshore institutional investors, especially insurance and pension funds, can invest through units and bonds issued by the IDFs. Infrastructure debt funds, IDFs, can be set up either as a trust or as a company. A trust-based IDF would normally be a mutual fund (MF) regulated by SEBI, while a company-based IDF would normally be a NBFC regulated by the Reserve Bank. According to SEBI mutual fund regulations, IDF means a close-ended mutual fund scheme that invests primarily, minimum 90% of scheme assets, in the debt securities or securitized debt instrument of infrastructure companies or infrastructure capital companies or infrastructure projects or special purpose vehicles, which are created for the purpose of facilitating or promoting investment in infrastructure and other permissible assets in accordance with Securities and Exchange Board of India, mutual funds, regulations, 1996 or bank loans in respect of completed and revenue-generating projects of infrastructure companies or projects or special purpose vehicles. IDMFs can be sponsored by banks and NBFCs. Only banks and infrastructure finance companies can sponsor IDF-NBFCs. IDMFs are suitable for investors who are looking for a low-risk investment option that provides regular income and capital appreciation. IDMFs offer investors the benefit of stable returns, as the scheme invests in debt securities that have a low default risk and a stable cash flow. IDMFs also offer the benefit of portfolio diversification, as the scheme invests in debt securities across different infrastructure sectors, which reduces the concentration risk of the portfolio. IDMFs typically have a fixed tenure, which can range from 3 to 10 years, and the scheme is structured in a way that the investments made by the scheme are aligned with the investment objective of the scheme. IDMFs may also offer tax benefits to investors, as they qualify for indexation benefits on capital gains earned on investments held for more than 3 years. Investors should carefully evaluate the investment objective, portfolio composition, and historical performance of an IDMF before investing, and consult with a financial advisor if they are unsure whether it is a suitable investment option for their needs. As with any investment, there are risks associated with IDMFs, and investors should be aware of the risks involved. Thanks for watching my video. Narla, the mutual fund distributor.